Okay. So the things that I look for in trading is first you just got to like mark out some levels, you know, make sure that we want key levels. So, you know, key support and resistance levels. Jump on the daily time frame. Have a look here. Alright, so we've got a key level there. It's pretty far away from the current price action, so we just got to look for another key level, which is about, we've had a break there and a retest there, drop under resistance. So you sort of got like an EQ line here. Okay, so you got some support, some resistance, so that's sort of like that midpoint, and then high resistance here. We've got a clear trend line like here. Right. So that's that current trend. Another trend coming up, and then sort of just market structure there, but we can break it down on another time frame. So that's the general gist of where we are. So we are trading in the middle, so it could go either way at the moment. Let's jump on the 4 hour, have a look. Maybe we can, you know, fine tune these levels even more. So to break, retest, it's a break. And we'll jump down onto the 1 hour. So I'd be for here. I'd be looking at a short from this level, so 308, or a break and retest, and then trade it up. So got some resistance there. All right, so rejection here, inverted hammer there. So rejection on resistance with inverted hammer is a short, right? And low volume needs to be low volume at the top, which it is. So low volume here, high volume here, pull back, right? So there was a high volume bearish candle in there, so there was a lot of trading volume in this candle, even though it's small, right? So the spread is the open to the close. Okay, so the spread is the open here to the close there. So the associated volume there was 3.637 million, and the associated volume there was 2.786. But if you see these two candles here, so bullish engulfing with a bearish candle like that, even though look at the size difference, yeah. You've got that size difference there, but the indication that price is going to get rejected is in the volume, right? So even though you think, oh, that's a bullish engulfing, that's gonna just, you know, break through resistance, but the bearish volume in these two candles would pretty much, so you got 2.8 plus 1.2, so you know, that's 4, right? So 2.8 plus 1.2, that's 4, and that's 3.63. Yeah. So now you've got two candles that are very small, and they're in alignment. You also got these candles here which are in alignment. So small spread, small volume, bigger spread, bigger volume, which gives you price action to volume confirmation, right? So volume is ascending while price action is moving up, which means that price is moving in the right direction. And now I would actually trade this candle structure here, because it's I think it's called 3 inside up. 3 inside up. Yeah, so 3 inside up, which is a bullish candle pattern structure, and it has the associated volume So decent volume here on the way down, right, and then a small spread with a nice candle there. So small spread, small volume, and then higher spread. And the reason why I can tell it's going to go up is because it closes just above the bearish candle here. So people want like all this. They want a ton of candles to make a decision, but really it just comes down to these three candles right here. Okay, so if that's your area, right, and you've essentially broken out of the bearish push, right, and you've already got bullish momentum, heavy bullish momentum here. Okay, so what I like to do is I like to put a base in. So when there is a rejection, right, so we'll call that the base, and I'm happy to put a limit order on the base, right? So I put an order at this level, right? So it breaks, comes back like this. I'll put an order on the bottom of the wick here, right? Because this is potentially the next consolidation phase. And if I miss that, then I look for a candle pattern like this, and then I'll be opening on that next candle. And because I've seen that structure so many times to know that as long as it closes above the red, then it's pretty good. A high probability of pushing up, and that's a decent. Even if that's just the one, you just hold it for 1 hour, right? That's an hour. It's moved up 4%. 10x, that's 40%. At 20x, 80%. So I usually do 20x, so that's 80% there. And I'm pretty happy. You got a rejection there, and then you got one last push. So if I was looking for that push, you could get that. So yeah, that 27 there. If you just do the fibs on the candle, then you could aim for that 27 and potentially add to the position here. That's sort of more of an advanced trading style. Then you got double top rejection. Okay, and you've got volume, small body spread, right? Small body, small volume, and then you got a larger spread, larger volume. So you've got that price action move down. Okay, so you got volume, you got price action moving down, volume moving up. Now that's a tick for volume to price action, saying that yep, the trend's come to an end, and we are reversing in those two candles, right? So and it's the trend, right? So the trend's already broken. Okay, so that's just like that last final push, breaks trend, because we're respecting this one here. So I see a lot of people go like this, yeah, and they like use those two candles and they try to thing like that. Now how you can spot if your trend is good is you can use the accumulation distribution line, right? So and then you're going from that point, right, and up to this point. So just up to here is actually where you start to top out, right? So your accumulation phase is starting to end. Okay, so it's pushing up, pushing up, pushing up, and then at this point, right, this candle right here, that's where the trend is starting to weaken, because you can see the distribution. So this is accumulation distribution. So accumulation is where people are buying, right? So buying, buying, buying. You can see it all up there, right? There's the first initial push up. So you got that lower low here, then you got a higher low here, right? And then it pushes up like that. Okay, so that's the peak of accumulation, and now it's just like that last push, getting it up to resistance. So yeah, people are starting to close their positions, right? No sellers, all buyers. That last hurrah, and bang, double top, and then taking profit, taking profit, taking profit, right? Loading up into the shorts and pushing the price back down. So that's if you're gonna buy here, that's how I would look for that. and or if you're down on the bottom, then you know I'm looking for. So I'm looking. So you, first of all, we're clearly in a distribution phase, right? So we've come up, take profits. See that price is moving up. Price action and accumulation are in sync. Now, and then you've got it's starting to falter at resistance, and you've got those two levels there, three levels there, saying that all right, you know, price even though it's just going sideways here, we're actually distributing, and that's what you got to try to teach yourself to see is the distribution uh, of because it's not sometimes it's not so obvious, right? In the beginning, so that's distribution. It's also at resistance. So you know you want to be closing your position here, and then you want to be shorting, right? So inverted hammer, right? Inverted hammer is good one to potentially short on. Otherwise, you know, you go for that bearish divergence, which is in this candle here. So keyboard's not working. So bearish divergence here. Right, so you got price action moving up whilst it's making a higher high with a higher high and a lower high with a higher high. So that's bearish divergence in there, and then you got a lower high again as price action attempts to push up. So that's your signals to get out of the trade, right? So I use price action, volume, and you know you got massive bearish pressure. Look, in these two candles here, it's 3.332 million and 3.307 million volume. So that's telling me that you know there's huge selling pressure in here, and anybody who buys in here is going to get stuck. You know, you're going to get stuck. So that's what I look for in here. I'm looking for you know massive sell-off, bigger sell-off, resistance, and an inverted hammer. Right, inverted hammer. Inverted hammer, resistance, and high bearish pressure. Distribution in consolidation. Right, so that's my confirmations for this. Now, look, I know it's a fair bit there, but the more you do it, the more times you do it, the less it's such a the less it's a you know mouth of words, a vomit full of words, and the more you'll just come to see and you'll realise. So that's a play at resistance. Then you've got you got bearish divergence there, so the trend's coming to an end, right? So that's sort of that one last push, and you can see the wicks to the upside. Look, double top hammers, inverted hammers there. You know what I mean? That's a massive selling signal, right? Double top hammers, bang bang, get out short. You know, if you miss the top, then you're looking for that lower high. So higher high, lower high. There you go. There's your short. You know what I mean? So sort of in line with this supply zone in here, right? So there's your supply zone in there. And if you're looking for fibs, your Fibonacci retracement tool, bang at 618, nice. So that's where you put that there. So double top here, bearish divergence, inverted hammers, and fib retracement with a 618, right, for a short, and with that bang straight back to 27. That's a nice play. Okay, so that play is a double top, bearish divergence, right? Inverted hammers, and end of trend. Right, so end of trend, and if you didn't get the top, second entry is 618 pullback, and in line with supply zone, and lower high for, there you go. So you got price action there, and then you got so top, so distribution. Right, so these are high quality, like in my opinion, these are high quality trades, like real high quality. This, if you can master these things, I think you'd have an extremely high win rate, like successful plays right here. I've fucking given a lot of time to finding this stuff. It's like what I'm sharing right now is worth a lot of money. You know what I mean? It's worth however much money you want to really make and put the work in to take on board. So, and you've got your reversal here, you've got your lower high here, but you've got a higher high here, right? So, and you can confirm the strength of that higher high, lower high. Okay, so yes, you've had that breaking trend and price actions going down. You got a lower high, and then you got a higher high here. So you got bang bang. And that's your confirmation that potentially we're going back up again. So if you're a range trader, if you're range trading, you look for that low here, and then the higher low here to say that yes, we are accumulating once again, right? Because sometimes what you'll see is price action moving down, and it makes a higher low, but a distribution makes a lower low on the distribution. So it says that there's weakness. It says that even though it's created a lower high, there's still a lower low on here, which is again bearish divergence. But in this sense, we've made a higher low with a higher low in the accumulation distribution zone, and therefore I would really be taking profit here, watching it coming back, and then trading it back up to the other way, and that's a range trade here. And then once again closing at profit at resistance here, so it does sort of break past here. That'll be my first structure, take profit. That's why there's a lot of selling at that $3 zone, and then you've got easily load up on another short back down, right? So now you're just trading it back down here. This time you get the 618, which is great, and you also can see that it's bottoming out from here. So yes, we're moving down here, but we are going up, right? So we're moving up. So price action moving down whilst we are accumulating, right? So this is accumulating. So people are buying here. People are buying. So somewhere around here, there's your first sort of signal here, right? So you got 1.506 million volume. You got 1 million volume there. You got some heavy volume on that candle in comparison to the others, and you got accumulation moving up whilst price moving down, bullish divergence. So now you're just looking for that sweet spot, and if you want to get some confirmation, just look left, right, and you've got a demand zone right there. So there's a demand zone right there. You've got another one here. So there's the two there, right? So since candles closed through that demand zone, we delete it. We still use it. It's still a decent area for support, right? Support is more a line through all price action, and demand zones are fresh price action and no candles can close through it. So same with supply. Any candles close through supply, then you delete the supply zone, and you can use resistance line. So that's the difference between supply, demand, and support and resistance. So yeah, you've got that reversal structure here. Now, if you didn't want to get down here, you got bullish engulfing there, and then you've got your base here. So you got your base here, right? And that would be so where your next entry point of entry is, all right? And your high low, and then you'll be trading it up. So also you've got bullish engulfing, and then you got a massive hammer here, which with 1.856 million volume, and a hammer here with decent volume there. So I'd be double hammers, bullish engulfing, double hammers. There's plenty of room to move up here, up to previous year. So that's where I'd be entering there. So demand zone, change in market structure, accumulation, bullish divergence. So there's so much that you could confirm here. High volume hammers, right? On that base of the high low, bang, trade that back up, and yeah, you just keep going until you get that exact same rejection signal. So double top, inverted hammer, and trading it back down, right? So and then we sort of, but I'd be you can already see it's starting to come back up. So if you were in a short, right, it's pushed up, pushed back down, rejected, but now you got some hammers here, and you can sort of see the accumulation starting to move up within this structure here. So I'd be out because you're assessing for weakness, and then I don't like to trade the middle, but it does look like it's come back, and potentially going to retest here. Now this is where you'll be looking for a higher probability of a break to the next range, because it doesn't come back down here, right? It's falling short here and pushing up from there. So I'll be looking for potentially the breakout to the next level, up to $4, something like that. So there could be something there. As for a trade right now, I'll be waiting for price to come to here. So I'll just chuck an alert on it, right? And assess there. So whether it's going to come up, reject, and then reject hard and push back down, or if it's going to break and push back up, it's yet to be seen. Otherwise, that's what's happening in here. There's no trade at the moment.